So now that you have been exposed to the components of a pension expense, you've been exposed to some of the vernacular that is attached to pensions, we're going to use a worksheet for the employer's pension plan injuries. And the text material makes use of the worksheet approach to illustrate this. The worksheet is unique to pension accounting and is utilized to record both the formal entries and the memo entries that are necessary to keep track of all the employer's relevant pension plan items and components. This is the basic format of the worksheet. You see that it separates the left side, which is the general journal entries columns of the worksheet, that determines the entries to be made in the formal general ledger. The right side, the memo record columns, maintain balances in the projected benefit obligation and the plan assets. The difference between the pension benefit obligation, or projected benefit obligation, my apologies, and the plan assets is the pension asset liability, which is then reported on in the balance sheet. On the first line of the worksheet, the beginning balances of any are entered. Subsequently, transactions and events related to the pension plan are recorded using debits and credits, using both records for recording the entries. For each transaction or event, the debits must equal the credits. The ending balance in the pension asset liability column should equal the net balance in the memo record. The worksheet approach to accumulating balances for pension accounting is the most effective means of keeping track of some really complicated computations. This allows us to look at it in pieces and see how it comes down together. To illustrate the use of a worksheet, we're going to use this company, Zarl, who provides this information related to its pension plan for the year 2017. Plan assets on January 1st, 2017 are $100,000. Projected benefit obligation on January 1st, 2017 is $100,000. The annual service cost is $9,000. The settlement rate is 10%. The actual return on assets is $10,000. Funding contributions are $8,000. Benefits that were paid to retirees during the year, $7,000. And we're going to prepare the worksheet for 2017. I'm going to have this worksheet open on another screen. Unfortunately, you're not going to be able to see it. So you may want to take a screenshot or something, press pause, real quick, write down this information, just so you can see how it works on the worksheet on the next page. So on January 1st, 2017, we started with, we had plan assets of $100,000. So we had plan assets of a positive $100,000. We had a projected benefit obligation of $100,000, meaning that we had a liability of $100,000. That means that there is zero pension asset liability. Annual service costs for the pension expense were $9,000. The settlement rate is 10%. So that is that interest rate we talked about as a result of discounting. So we take the $100,000 of projected benefit obligation, multiply that by 10%, and that says that we need to recognize another $10,000. We had an actual return on the plan assets of 10. So because those assets made money, that is 10,000 we won't have to take into account this year. We had funding contributions, or we paid out in cash, 8,000. And benefits that were paid to the retirees were in the amount of 7,000. We then carry everything down to recognize what the journal entry would be. We would have an increase to the pension expense of 9,000. We'd have a decrease to cash of 8, and we would have a credit to our pension asset liability account of 1,000. If we take all of this same information and run it over here into the memo line, so here we have our service costs, here we have our interest costs, here where we had the positive for the actual return. This is where we added 8,000 in contributions. We paid out 7,000, so 7,000 in reduction in our plan assets, as well as 7,000 to the projected benefit obligation. And when we total these lines, they're not the same. The reason they're not the same is because until we do our journal entry, we still have $1,000 of net liability. So these two, the difference here and this, should be the same. To create the entry, we would have the pension expense a debit of 9,000, a credit to cash of 8, and a credit to the pension asset liability account of 1,000. So can you see how utilizing this worksheet will make your life much easier? In fact, as you are working your problems, I would make yourself a dummy worksheet, putting in if-then statements to say where something would need to go. So if this is a positive, then it needs to be a negative here. A negative, then it would need to be a positive here. So on and so forth. And it would make your life much easier. Now that we've looked at how to use the worksheet to help calculate those amounts for us, makes the journal entry much easier than us just sitting there and going, and knowing that there's so much more. Let's look at the prior service cost. That will be in our next video. Actually, I'm going to hit pause while I create a pension worksheet in Excel, and then we'll do one more pension worksheet actively as a group. So while this particular retirement liability worksheet isn't as laid out with the borders as pretty as the other one, it is absolutely got all the exact same information. It's got the annual expense, the cash, the prior service cost, the gain or loss, the pension asset liability, the projected benefit obligation, and then the plan assets. And so to illustrate this one, I'm going to give you the information here. Actually, I'll read it as we go. We want to enter the time period here, and this is for actually January 1st, 2018. This is for Oehler Company, OEHLERCOMPANY. And plan assets on January 1st, 2018 were in the amount of $450,000. The projected benefit obligation is $450,000. So now that we've started with the balances, what was there to begin with? Let's start calculating for 2018. So the annual service cost for 2018 is $27,000. We carry that over to our projected benefit obligation. The settlement rate for 2018 is 7%. So we will take the 450,000, multiply that by 0.07, and that gives us 31,500. Carry that over here. We have the actual return on assets. And for that, it was $30,000. We have our contributions. In the amount of $32,000. Payout cash of $32,000. And then we had benefits paid. In the amount of $17,000. So here we have actually completed the worksheet itself in all of this. I apologize for that. Now we need to do the journal entry. So we have the journal entry for 2018. So we will take the sum of this column, and that is a debit at $28,500. Sum of these called this column, which is a credit at $32,000. We have nothing in any of the rest of these. So this gives us an entry needed of, or a balance entry of $3,500. As a debit. We then come down one more line, or I went down two because I like space. We know that we need a debit balance to our pension asset liability. And then we need to look and see if this trues to the difference between our PBO and our plan assets. So the sum of our PBO, all those transactions and things that affected the projected benefit obligation, and the sum of our plan assets, those things that impacted what was actually in the account, and the difference between them that's what I get for using the negative. It's $3,500. This tells me that I absolutely did do all of my calculations correctly. So my entry would be we would have a pension expense. We would have our cash, and then our pension asset liability. And our expense is $28,500. Our cash paid out, I believe, is $32,000. And then $3,500 as a debit to our pension asset liability. But it's a little bit messy and could look much cleaner. Let's make that happen. There we go. This is the journal entry for 2018 for Ollier Company. So we will end this video here now that we have ran through a couple of uses with the worksheet underneath normal times. We're going to talk about prior service costs and look at those in the next video.